Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. We were just talking about in the green room. We've achieved 30% of our class grade for class participation, just making it to Friday. We feel like we accomplished something. We made it, Mark. Happy Friday.
We did. Although, we actually, not only are we not matching today, I mean, we have shades of blue. I mean, you got the brown, but you have the wrong color blue. You have the Hopkins blue. I'm wearing the Notre Dame blue. Notre Dame plays Hopkins tomorrow in lacrosse. So we'll see how that goes for my Irish. Quick reveal. So I'm all Irish decked out today. So I got the green pants. I'll explain why. But then I have I went with the Bitcoin Wizard, join us, sock game today. And I got the Irish belt on as well, the Notre Dame belt. So all Irish all the time. But I went back and forth on should I wear the roller coaster socks,
right,
or should I go with the I went with the Wizard socks, the join us socks, right? Join the team, because Bitcoin's still a small portion of the general population. I mean, there are a lot of us that care about it, but we do want it to get to billions of people. And that is part of this message of the join us. But the roller coaster is real in the sense that in the past week, we're basically flat. We're up almost 1%. We're basically flat, just under 80K. What's interesting about that is, we had the up, all the way to 82, fell all the way down to 79 on, peace deals on, peace deals off. Like what the deal has to do with Bitcoin, I still don't really understand. Then all the way back to almost 82 again, and then right back to 80. So we've had, and remember, a roller coaster, it's the whoop-de-doos, but then you end up in the same place. So it actually kind of works. Now, the flip side of that, also in a roller coaster, right? You start and you go into the track, right? And the track takes you up the big hill, right? And we're kind of in that over the last month. And that's why I will argue, as we make a series of higher highs and higher lows, that we are in an accumulation pattern, and the smart money is buying again. And so I also almost touched my bull socks, and I wasn't really ready to say winter's over and we're in a bull market. We're definitely out of the bear market. But
from your mouth, Mark, to God's ears, right? Because we had some of those fears where we can slip down to the 50s, but we've been tight, to your point, right? We've been in that, we touched it to 82 this week, 82.8, and then we're tight in that 79.80, where it's this new feeling of the new normal, right? Yeah. I remember when we were around 100K, now it's 80.
Yeah, well, and I'm emboldened by that. So what was happening early on in Q1 and into the beginning of Q2, two things were happening. One, the Metcalfe's law value was slipping because hash rate was being shut down. Part of that was the cold weather. So there's some factors. Part of it was the war and Iran shutting off a bunch of mining. But generally speaking, that was a little bit concerning, because the Metcalfe's law number that Tim Peterson calculates, and we should have Tim on sometime as a guest to be fun, is a pretty good kind of anchor to windward. And look, I'm a value guy at heart. I like to buy things below their fair value. So if the Metcalfe's law value was 80 and we were trading in the 70s, it's like, okay, it's a little bit of value, but not much. Well, interestingly, over the past 2 months, Metcalfe's law has kind of equilibrated back. So it was making this long parabolic curve, and it had this dip down, partly war, a bunch of different things. but it's rebounded back to 130. And 130 relative to 80, that's a buyable gap, right? So if you're a value buyer, or investor, you're interested. Now, the other interesting thing, so I'm in the office today recording instead of at home. So you see the Fighting Irish picture instead of the picture of I think it's my wife's grandmother's wedding, something behind me at home. And I have the buy Bitcoin sign at home. But the reason I'm not at home, normally it's work from home Friday, is because our internet went down. And you don't understand or appreciate how dependent we are as a society, right? On internet until it's gone. Like,
that's right.
The last night. So what happened is our gateway, whatever router went down,
Mm-hmm.
and AT&T sent us a message saying, yeah, your machine's dead and we'll send you a new one. I'm like, well, like when? I mean, can't you have somebody drive by and drop one off? And so we'll see. So theoretically, it's going to get here. I'm actually okay with it being a privilege and having to pay for it. But man, when you do pay for it and you use it, and then it's like, I couldn't play my game, which again, first world problem. I like to relax a little bit at night and play Monster Hunter. And I could actually play the game, but I couldn't play with friends. And I'm on this, not that anyone cares, but I'm on the final battle, like literally the final boss. It's actually the 4 big bosses in one battle, and it's time. And I've tried it solo, and I just can't quite get there. Like I'm almost getting Arkmel and time. So the only way I'm going to get there is with some, better hunters than me. So, but I couldn't do that. And then I went downstairs. I was, I'll just go hang out with Stacy. And she's like, I'm going to bed. I can't. I need something on Netflix to distract me because she makes these amazing needlepoint stockings for the kids. We get a new grandkid coming, and so I can't stitch in silence. So I'm just going to bed, and I'm just
right.
And so like,
oh no, so you have to go back up to the attic.
10:30. I mean, so we're super old. Anyway, it was fun.
Oh, but I mean, it's to your point, Mark. You might remember the days in your gaming career where the differentiation between a really good gamer and an average gamer was internet speed, right? So the people who had the best speed, we would get like the lag kills. You remember those? So now we're kind of
no, it's so funny you say it. There is one Cerebras. There's this one monster, and its moves are so fast in the game that my internet, because I'm up in the attic, right?
Right.
I'm still getting lag kills from this thing coming in with the talons and bleeding me out. It's so funny you say that.
Yeah, it's funny on that, Mark. And lag reminds me of what's happening with the Senate and what we were thinking about with the Clarity Act, Mark, because that's one of the reasons why maybe we've been in this pattern where we haven't gone all the way down.
Yeah.
Right. Because there's some optimism that we might come back around. And maybe you can unpack this for us as this kind of new compromise, this bipartisan passage, which is so rare nowadays. People can actually talk to each other and figure things out. But, this idea is that we're headed for a markup vote in the Senate on Thursday. And it's going to answer some of the biggest questions, right? We're going to define the CFCC potentially as, the right to codify the rights of custody crypto assets. I think that's really, really big. We're going to have key crypto terms like mature blockchain and digital commodities and all these things that can kind of allow for this big piece. And this is the part where I'm a little confused. I might need your help to understand like the debate that's happening now, crypto firms and traditional banks, and how the rewards are going to get treated, because this is really what has caused the most delay, because banks were supposed to get more restrictions for the reward. That's what's kind of being let out now and protect Americans. But now Americans can also earn rewards based on real usage of crypto platforms and networks, which feels like it protects Coinbase. So I'm kind of curious on how this might shake out.
So I was on Scott Melker's show yesterday.
Yeah.
And I love Scott, the Wolf of All Streets. And I did what I do from time to time, as my wife says, you can't say things like that. And I'm like, I know, but I kind of came at Brian, which is not very nice to me or really even very smart because he's way more successful than I am. But I've been very disappointed. I mean, there's no other word for it, in that I thought this guy was the champion of our industry. I thought he was going to fight the big banks and the regulators. And then it just became very clear that he's like, hell, I'm in the same boat, right? If I don't have to pay yield, then I keep the spread. And I'm like, oh my God. So now he's on the wrong team. And so you got Elizabeth Warren, who's clearly on the wrong team. And all her market, I mean, she did 40. So the regulators get the bill at like midnight on whatever day it was, Tuesday or Wednesday. They have 24 hours, 690 pages, and they have 24 hours. And within 5 minutes, she's submitted 40 amendments. 100 total. She submitted,
it's more than the Constitution.
Impossible. No, but think about it. But impossible to have read that document in 5 minutes. If you only got it, you couldn't have read. So who prepared those amendments? Well, her backers, the banks. And someone actually went through and said, okay, this one's from Bank of America and this one's from JP Morgan. And I was like, okay, well, but we know she's on the take. But I really didn't think Coinbase was, and look, we made money on Coinbase. I use Coinbase. But I'm
friends of Brian,
I'm just disappointed. I am disappointed that when push comes to shove, regulatory capture is for everyone. And, that's a shame because, look, I'm unabashed that the name of every bill is the antithesis of what it actually is. So the Clarity Act is just going to make things less clear. And the Genius Act made things dumb. Like we basically said, oh, if your name is Tether or Circle, you win only because you agree to buy our debt because no one else will. So the regulators, the people who write these bills, they're improperly incentivized. They have never actually worked, right? They are legislators. They are community activists, so to speak, bartenders. And so they don't really know how businesses work, but they do know if I do what this person tells me to do, I get paid. That's a crappy system. I mean, I'm sorry, that's the technical term for it. That's a crappy system. And so what you end up with is rules that aren't going to make us the crypto power of the world. They're not going to make, what they're going to do is they're going to preserve US dollar hegemony so the government can keep spending like drunken sailors and keep the banks from having to pay depositors for their money. This is the fundamental. I'm not a bank hater. I hate the banksters, but the idea of banking, I like. I don't want to keep my money in my house. I don't want to have bearer assets that can be stolen from me. I like having a place to put the money. What I don't like is then it becoming their money and them questioning me. And we had this again. So make an investment, simple AI investment, one of our good AI companies. Yeah. And my wife goes to the bank. The guy's like, what are you doing with this money? And like, I'm making an investment. In what?
In what?
Well, that's none of your business. And you don't need that information. He's like, well, I need it. I have to have it. And partly she's like, he's just bored because he's sitting inside this, thing handling deposits and withdrawals. And he's like, oh, hey, this is interesting. I'm a tech nerd.
Yeah. And what we do is interesting empirically, to your point, Mark. So, he's jumping all over that.
Yeah. And anyway,
but on this idea though, Mark, it was, where we're heading next, right? So the bill, if you remember Schoolhouse Rock, and I think the kids now, I forget this. I've learned more about
I'm just
the way
I'm only a bill. And I'm sitting here on Capitol Hill. Yep.
So we're going then, Mark, before the full Senate. It's going to require 60 votes to move forward. And then it goes back to the House, where a new version would have to get put to a vote. And then if it passes there, it's most sure to be signed by President Trump into law. So we've got a couple steps required. And also within that, maybe some optimism as well, because we had another vote that was passage. We have a new Fed chair that passed by a narrow margin, but it has passed. And so now what this means is, trying to grapple with rising inflation, which also tackles our, crypto markets. And this appointment for our markets is widely viewed as positive. And, it could potentially help Bitcoin. It may not in the long run. But
well,
what
here's
say
the
you,
funny
Mark?
thing. This was so funny. Kevin Warsh actually, even though he was appointed for totally political reasons, nothing to do with his actual qualifications. So putting that aside for a second, it's like that, the Brady Bunch, which was a show on TV when I was growing up about, the two families. So there was this scene, then Johnny Cougar. Or Johnny Bravo. I don't remember. Maybe it was Johnny Bravo. Maybe it was Johnny Bravo. Maybe that's where the cartoon Johnny Bravo came from. But Johnny something and Greg got picked to be this guitarist, even though he's a crappy guitarist, kind of like me. And long story short, at the end of the show, and it's a 30-minute show, at the end of the show, he's like, well, why did you pick me? He's like, because you fit the suit, right? So, I mean, it wasn't because he was a good guitar player. It was because you fit the suit, and we needed somebody to go on stage. So he fit the suit of what the current political handlers, the people behind the scenes that actually control the government, they wanted this particular person. Now, it turns out that he actually has more qualifications than any of the previous Fed chairs, maybe other than Rubin, way back when. So, who came out of Goldman Sachs. But everybody else, I mean, Ms. Yellen, I mean, these would be, Big Ben Bernanke, they were not qualified per se. I mean, they were great. Not great. They were academics. They were not real world people. At least Warsh actually has some qualifications, experience. So, from that perspective, he should be hawkish, and that is his nature, right? He is hawkish. And with inflation rising, he would be hawkish. But hell to the no, the only reason he got picked is because he agreed, as far as I know, that he will do what he's told, which is to cut, because we need lower interest rates. Because what you'll notice is every time the 10-year bond hits 4.4%, we get a peace deal. And we had like 6 peace deals now. Now, we don't have any peace deals, but we've had 6 announcements. And it's literally the moment the 10-year hits 4.4. And so it's because we can't pay the interest on the debt. Forget paying off the debt. We can't even pay the interest on the debt because that is now bigger than the defense budget. Although, what does Trump do? Well, I can't cut the interest. I'll just pass a bigger defense bill. And then I won't have to say that the interest expense, now that increases the total deficit and the amount of debt, but and that's somebody else's problem. So Warsh actually is qualified, pretty smart guy, should be a good Fed chair. But I think he's going to do the bidding of the even though they're independent. He's going to do the bidding of the White House, which is, we want cuts. We want cuts, especially with midterms coming up. And so we're going to flood the system with money. That will be good for Bitcoin and has been good for Bitcoin. In fact, you could argue that when Warsh was picked, which right about the same time as the war started, interestingly, Bitcoin has outperformed everything. It's outperformed stocks, outperformed bonds, and maybe stocks might have caught up. Now that might be a couple weeks old, but Bitcoin's been doing great. And that's a long-winded way of saying Bitcoin doesn't change, right? One Bitcoin is one Bitcoin. 1 ounce of gold, 1 ounce of gold. 1 ounce of platinum, 1 ounce of platinum. They are what they are. They're scarce assets. What changes is the amount of currency, dollars, yen, euros, lira, whatever, you need to pay for it. And U.S. money supply has been growing at 8% and accelerating. The really big one is China has been growing closer to double that, 17%. And that's where most of the global lift is come from, as usual. China always goes big or goes home. Anyway, that's kind of how I view it, is Bitcoin is going to have this tailwind with a lenient Fed chair because of politics, which were not supposed to be the reason, but I think that's what's going to happen.
No, I think it's well said, Mark. And as we kind of continue to expand, I think it's a great topic because it gives us so much to talk about, why we have kind of been in this kind of sticky middle in the 80s is, what's happening with the jobs numbers. So we had a little bit better news, although we are always skeptical when the job reports come out because those numbers sometimes get revised still. So tell people.
Every time
yeah,
they get revised, and they don't ever get revised up. They only get revised down. And It's crazy. If you just looked at the revisions last year, it was almost 1 million jobs that were over-reported, but no one ever looks at the revisions. They only look at the headline. The market's traded on the headline, and then they fix it. But look, the whole idea of the BLS, take out the L, the Bureau of S, the BS. The idea that they use this thing called the birth-death ratio to calculate the number of jobs. Like, you could probably just count the jobs. Like, you could probably just count the receipts that you get on, FICA taxes or something like that, or maybe do a survey of the companies or heck, maybe you could just look at LinkedIn, where how many posts of new jobs, whatever. You could probably measure jobs in the digital age. You could probably do that. Oh, no. We just say we're 29 months into an economic expansion. Based on that, we should have so many companies forming and so many companies dying, and therefore we have a net creation of jobs. It's just ridiculous. I mean, and the idea that we still do it in the 21st century is insane. Like, literally insane. I mean, maybe in the 50s when we didn't have computers, fine. I mean, still dumb. I mean, you could send people to the unemployment shop and count heads. I mean, you could have done something, but anyway, I find the whole sham comical.
Yeah, no, I would agree because last year we covered it. I think it was in January. We got some revisions that basically said the entire year's worth of reporting was an error. So we're at 150 now for this month. And we could figure out that might be a shift. But I thought it was interesting, Mark, because we tend to report on things as they're happening. And one of the things that we have been noticing is what's going on with Zcash right now. And we're not the only one that are noticing this. It actually made it to the cover of the Wall Street Journal, read every morning. And we have this question about why. Why is this kind of 1,200%, 1 year gain on a Bitcoin, quote unquote, imitator driving value? Because we're so focused on the big two. And with good reason, they had very strong inflows this past week, almost $1 billion, 857 million. But in terms of pure alpha and performance, it's not close with what Zcash has done this year. But, do people think it's going to be the next big thing or just a flash in the pan? It's really about this broader conversation, Mark, that we're seeing play out, not just in Bitcoin and crypto, but also in AI, in big tech more generally. And that's the issue of privacy. And I think that's really why it's been on this tear, Mark. And I'm curious to hear your thoughts because, we have seen this strong performance, but it's also one of those things where, when you're offering things like private payments through ZK Knowledge Proofs, I wonder how sustainable that is, especially when we're thinking about a change in policy that it's meaning to reduce some of that.
Look, I mean, so the huge issue. And privacy, different than secrecy, privacy, fundamental right? I mean, we should have the ability to have private information. Like, and historically we have had pretty good privacy with, a little bit of, there's little things that we assent to, for convenience sake. Now, the problem is, as the internet age, evolved, we gave up incrementally each time privacy for convenience or for social. Like, if you post a picture on Facebook, they might look at it and they might analyze it and they might look around what's in the picture and say, oh, that person likes collectibles. Maybe we should serve them ads about collectibles. Or, oh, that person's car is old. Maybe they need a new car. So that's a little intrusive. I mean, that's surveillance of sorts, but we kind of assent to it. And we all click the box, right? No one ever reads the 1,000 pages or 1,000 words, but they click the box. So you're assenting to it. But one of the challenges in crypto or digital assets or even Bitcoin, right, is if you have a wallet and you connect that wallet to the network, right now, the way it works is if you do a transaction, people can see all of your other transactions or all the other assets that you hold in that wallet. And that's because it's a transparent and public ledger. Now, people can't steal anything because it's protected, but kind of like, I mean, I use a simple example, like ID card, right? Your driver's license has your home address. It in no way is necessary. I use the example of my daughter. When my daughter was in college, she would go to the bars with her friends, and there's no reason the bouncer, and he may be a perfectly nice gentleman, but let's say he's not, no reason he needs to know her address. None. He just needs to know, are you 21? Right? That's the only thing you need to know. And actually, he doesn't even need to know the birth date. Just needs, are you 21 or not? So really, there should just be like an RFID that sends a signal. Yes, I'm 21. And it's, it's unique to my card and no one else can have it. So privacy is a pretty good thing. Like I when I check into a hotel, they say, I need your license. I'm like, no, you really don't. You can look at my picture and see that it's me, but you really don't need my home address. I don't really want you to have my home address. And I actually almost didn't get it to be able to check into a hotel once because I know we must have it. It's a law. Like I'm pretty sure, and maybe it is a law, and I just was flouting that law. But I mean, I almost went to the mat, and finally I just relented because I was tired. But it's just crazy the things that people think they have a right to. So Zcash comes along and says, well, we have a protocol that allows you to do a transaction, but we just block all this other stuff because it's not necessary. All people need to know is you are able to do a transaction. You, somewhere in your portfolio, no one needs to know, have the asset that you claim to be transacting. And that's a good thing. Now, of course, the regulators, back to the Clarity Act and all, oh, well, that means illicit things could be happening. Well, sure, but any illicit stuff could be happening with, people just get a fake ID. If a bad person wants to do a bad thing, they'll engineer their identity and they'll get on an airplane and crash it. I mean, so bad things happen, sure, but the fact that privacy exists does not make everything bad, which is what that group is trying to convince everyone. So privacy does make sense. Now, the challenge of it is, well, you give up some centralization versus decentralization because this network's not as big, it's not as well used. And obviously it's manipulable because, the Winklevoss twins bought a bunch of Zcash and everybody else jumped in, and, it's kind of what Elon did with Doge. So maybe that's, that makes you a little squishy, but generally speaking, privacy is good. Now, interestingly, we're looking at an investment in real time. in this company that does privacy for AI. And one of the things that I'm sure some people think about it, but most people are not. Every time you type something into ChatGPT or Anthropic or any of the other tools, they're keeping it. And the problem is, it's not just your home address. Like, you're sometimes talking deepest, darkest secrets. You're asking questions about your health. You're asking questions about your finances. That is being used against you. Now, so far, it hasn't gone to the extreme where you type, I want to know how to build a bomb, and that AI sends the authorities to your house. Like, maybe you're just interested in how a bomb is created, and that's your right, free speech, to do research on that. But they could turn you in but what if they misinterpreted something you said and they turned you in? So I haven't gotten to that totally dystopian, but the interesting thing is, I was foolish. I did not know that when you type something into the context window, what gets sent to the model is not exactly what you typed. It blew me away. They reinterpret it to say, well, what you really meant to ask, because it's easier for us to find, is this. Or, we want to serve you certain information, so what you really meant to ask was this, so we can answer it. But then the worst part is the stuff that the model generates. Then there's another layer that reinterprets it and substitutes in some things that they would like you to see. I'm like, hell to the no. So these guys have said, nope, we're going to get rid of those two layers, and it's all going to be pure and actually not saved anywhere on any server. And that coin has just gone absolutely ballistic. So that's a long, long way of saying privacy is good. Secrecy, bad, right? Doing stuff that's clandestine or illicit secretly, that's bad. But privacy, that's a fundamental right. And so I don't know enough about the pure technology, like the number of nodes and the number of validators of Zcash. I haven't, done the deep dive yet to know if it's flaws, not flaws, if it's immaturity versus other things like Bitcoin are bad enough that you just should stay away, or whether it's a pretty good alternative. I mean, to me, nothing beats Bitcoin as pure store of value and a perfectly secure network. I'm very comfortable that is the ultimate. But I haven't really done the deep dive on Zcash.
Yeah, the regulation there is the hard trade limit, right, Mark? And I think that's the interesting point, that it at least provides the option for privacy, because unlike what you probably suspect on Venmo, if you make the transaction private between parties, it's actually not private. You just don't show it to your social media feed. But here, there's actually kind of shield protocols that can keep transactions private for longer. And I think, that's part of the thing here, where we always think about what's next in our industry. Are there diamonds in the rough? Are alts dead? When is alt season going to happen? And we're seeing that there are others that are continuing to do well in this, and they have some themes, and privacy is certainly a big one, Mark. So,
well, no, X, to that point, what's fundamental is this idea of permission versus permissionless.
Right.
Everything in our world today is permission. And 99% plus of the time, that's totally fine, right? And we've operated that way for literally hundreds of years. But what I mean by that is, when you go to make a wire transfer from the bank of ostensibly your money, the bank gives you permission. They can stop it. They can not send it because it's technically their money. When you give your card, right? We've all had the experience. You tap your card and it says decline. for lots of different reasons, not just non-payment. Oh, and this happens to me literally every Christmas, because I don't shop that much. Literally, I just don't shop that much. And I go out and I do Christmas shopping and I get declined. And I call up, I'm like, are your systems really so dumb that they don't know that between December 20th and December 24th, this guy is going to go spend a bunch of money at Apple and Best Buy? Is it really that dumb that you're declining my card? And but we've all had that experience, but that's a permission system. And even, Venmo, right? You assume that if you, do the QR code and you send that, but no, they could say, oh, nope, don't like what you're sending to. Take the Canadian truckers. You supported them. Your permissions are gone. You're locked out of your bank account. And look, we came really close during the lockdowns to permissions to move. Like literally World War I kind of checkpoints at borders. Like, oh, geez, you didn't get vaccinated. You can't come into our country. I mean, it's just mind-boggling how close we came to a fully permissioned world. And I still think there's people trying to work at that, right? And I think that's part of what Clarity and Genius are trying to do is to get a place where the government decides, oh, you're using the wrong stablecoin. Sorry, that money's no good here. That's a world that's pretty dystopian. A permissionless, like, I want to send you, some money. We're going to make a bet on the lacrosse game or whatever, or basketball game. And I, send you some money. I don't need permission to do that if I use Bitcoin. That's a better system, or Zcash. But now if I choose that privacy option and the government could say, oh, that doesn't go because you chose privacy, that will be a problem in my mind. I mean,
yeah, no, I would agree. And that's the biggest hurdle that they're facing, Mark. And, if we're going to zoom out just a little bit, we've been speaking a little bit about how there are signs for optimism in our markets, that they're doing okay. They're not doing amazing. But one thing that, while our markets are showing signs of life, on the VC side, the activity hasn't quite caught up, right? So you've got around 5.4 billion that has been invested in VC firms this year, which is down more than 2 billion from last year in 25.
Yep.
But Mark, I know already your reaction, but I'm going to set you up to get wound up. So the idea here is that there are some reports, there's some beliefs that this may be changing because people, namely a couple of the marquee firms, are raising huge dollars in the crypto space. So you know what we're talking about. We're talking about Wand Ventures and A16Z, 3.2 billion with a B, yes, in their raise, 1 billion and 2.2 billion respectively. And then Dragonfly Capital had 650 for their fund 4. So we are seeing some signs of life here, but it's not nearly where it should be relative to last year or about what is supposed to come the space mark, because we've seen that inflationary data is continuing to rise, right? So we saw CPI 0.8% this year over year. It's up from 3.3. And obviously we've got this little war going on, which is not going to help in the short or the long term. So Mark, the comment on the lag there between the VC side and
look, I mean, the reality is, and it's always been this way. I shouldn't say always. It's been this way for the last 30 years. And
right.
But it wasn't always this way. So in the early days, right, back 50 plus years ago, there really wasn't very much venture capital in the sense of, actually go all the way back into the 50s, so 70 years ago. There really wasn't much venture capital. It was mostly a few angel investors and a little bit of organized capital in Boston and then a little bit out in Silicon Valley. But the industry didn't really exist. And it certainly was mostly individuals and wealthy people. And then it got institutionalized, and now you got big players, sovereign wealth funds, pension funds, et cetera. And what we know in every asset, not just venture capital, whether it's distressed debt or private equity or public equity or hedge funds, there is a herding effect, right? There's I need to get into that fund. So when Julian Robertson was running Tiger and he was the hot, everybody wanted to be in Tiger, and it grew to 20 billion back when 20 billion was a lot of money. And then, Ken Griffin's firm Citadel has grown to be one of the largest, and Bridgewater and, Blackstone. So there's this herding phenomenon. And it's like, you don't get fired for buying IBM in the old days, right? Why buy this new Dell computer when you just buy Big Blue? And that's the same way. So I joke, look, I don't spell my name with a C, I spell it with a K, and I didn't invent the browser. So the other Mark gets way more capital than this Mark. I get that, right? They're a fantastic firm. I don't begrudge them raising, and I actually applaud them. They cut their fund back because they raised $4.5 billion, and that one they figured out was too much to do true early stage investing. You can't do it. And the second thing that happened is, like you said, the war, and so big sovereign wealths in the Middle East who were throwing lots of money their way through less, and a whole bunch of different reasons. Katie Hahn, spun out of A16Z. She's great. So I understand and appreciate the herding effect because, we see it. I mean, we made inroads because we were early, right? We were, third or fourth, depending on who you ask, venture fund to start, right? There was Pantera first. I know the Blockchain Capital guys say they were first, but Pantera was first, then Blockchain Capital, then either us or Placeholder. I'll say us, but so we were early and we got into a bunch of people first, but I never heard of you. And, you got a bunch of young guys and he's doing this crypto thing. I don't know. But we got super lucky. We got a couple big pension funds and some endowments and some foundations, and we've had a great experience. But we weren't in that famous camp within the big institutions. And so we had this one institution, and they looked at us and they liked what they heard, and they were ready to commit. And they're like, well, these Pantera guys, they seem to be more famous than you. And Dan's handsome and I'm not. I mean, but okay. So we'll split it. And then they got freaked out and they ended up not investing because of the FTX debacle. But the point was, even they're like, yeah, we like your story, but they're bigger, they're safer, they're more well known. They couldn't get in to A16Z at the time, which is kind of funny, right? That there was so much demand for that fund, which shows there's usually an inverse correlation between demand and return. Smaller funds from that vintage doing way better. But all that said, I'm heartened by the fact that people are still investing. That's good. Sadly, this does make me sad. That investor I was talking about, and I won't name names, but they were gonna put a bunch of money in 22. They decided not to. That's actually a great decision, but they're still on zero. And you know how I feel about this. Get off zero, right? Zero is the wrong number. But anyway, so not that I'm bitter about it. And I love the Fidelity guys. Jessup is a great guy. So this fund, I called them earlier this year. I said, look, you missed it. You missed the bad vintage. Hey, how about you come in now? Like, the board won't even talk about it.
Oh my God.
Come on, guys. I mean, this is the perfect time. But I think that is part of the reason the numbers are smaller, even for the famous ones. And it's been the toughest fundraising environment we've ever seen in, all the years we've been doing this. But the good news is those who did invest, math and history says they're going to get really nice returns. That's not promissory, and I don't know, but history tells us that the highest capital raising years are the least good, and the lower capital raising years are better. That's just the way it has always worked. And there's other reasons why, but that's the way it's always worked.
Mark, mostly these last couple of weeks, we spent a lot of time talking about AI. So today we wanted to course correct and come back to some of our crypto roots and talk more about this industry, but we could not escape the full episode without talking about AI. So we have been waiting to kind of give us time at the end to kind of have this combo chart of the week and AI story. And Mark, it's the big one. It's Cerebras and what this means for
literally the big one, the big chip, the big story, the big, yeah, love it. Well done, well played.
So I will go to the chart for setting that up for what has been the biggest tech IPO since 2019. Uber, Mark, may they fare better, at least in the short term, than Uber did following its IPO. We don't want to wish that fate on anybody. So I will present, and then we can chat about Cerebras and what that could mean.
That is, again, what I was talking about, that is a fact. Large IPOs do not do well, generally speaking. And it makes sense, right? I mean, when everyone's rushing to get in something and the price goes to levels that don't mathematically make sense, it's logical that then they struggle on the other side. And the ones that you don't really think are going to be great quietly just, make their way up. So again, we'll talk about the prediction, but I think this one will probably follow suit.
Yeah. And also kind of thinking about some of the numbers, Mark. So as we kind of set that up, it initially had its shares sold for $185 and then kind of concluding all the way 68% to 331. So I think it's a beautiful chart to at least think about, what this means for us as investors, as an industry, but then also, what it could mean for the ABCDs is an area that we have been looking at. We have long said on the show, Mark, that 25 and 26 were going to be the redeem team, right? The redeemer years, where after a lot of wait and basically, zero goose eggs on exits, that things were going to be backloaded. Now, there's still some folks that are looking to wait. Some of the crypto guys that have opted to wait a little bit further. Some have jumped in and done well, but the AI guys are not waiting, Mark. And I think this was one and a funny story about, Benchmark that came in, this owned around 10% of the company and has done fabulously well. And that almost didn't happen, right? It was their first, investment in hardware in 10 years for Benchmark. And, they're extremely selective. They almost didn't take the meeting, Mark. And in fact, after I'm reading the story on TechCrunch, one of the partners said, "Why did you even let me take this meeting?" to his EA. And so fortunately, that did appear on the calendar because it made them a fabulous amount of money. And also, Mark, it minted 2 new billionaires as the founders of this company. But I think this growth has been extraordinary. And it's also, what maybe talking a little bit about what they do. Now the market cap is 95 billion. And I love why we will check in the morning, which is always a little bit different when we're reporting on markets. They're a little bit down to start the AM here, around 10%, which is common when you're, having this new supply of shares come in the market. People are trying to buy, they can't get it. There's lockups, and then eventually they can once it all settles. What say you, Mark?
So there's so many things on the story. So these guys raised $1 billion in the private market back in 2024, and I'm sorry, no, in 2025, and I think the valuation back then was around 10-ish billion, if I get my facts right or wrong, but 10 billion, and it seemed like a crazy number. And then they filed an S1. They were going to go public in October of 2025. And they had to pull the IPO because one of their investors was this Middle Eastern-based group called G42, which, according to the reports, right, has ties to China. Well, it's a Middle Eastern fund, but maybe they have money from China investors, and so they pulled it, and we were invested in Grok at the time, and what we heard was, yeah, that's what they're telling people they pulled it for, and then that's probably true. But the real issue was that what these guys do is they make something called a wafer scale chip. So normally, you watch the machine, it makes this wafer, and it's actually an amazing thing. It goes 1 millimeter an hour. And think about that. And they get to be, 300 plus millimeters. And so it takes a long time to make one of these wafers. And then they're so valuable that they slice them up and make chips, right? And we all know the issue around chips is, they can heat up and they can have impurities and some of them don't work right. But generally you get a yield on your chips. So these guys had the idea to say, well, if you slice up the wafer into chips and then you connect all the chips together, okay, that's one way to do it. But what if we just kept the wafer as one thing? Now the impurities per unit just mathematically are going to be lower, right? Let's say you have 7 impurities on this whole wafer. If you have a single chip that gets one of those impurities, it's bad. You got to throw it away. So maybe the good stuff will overwhelm the impurities. That actually turned out to be true. That's interesting. So, and we can pack more processing so we can do inference better than training. So, NVIDIA chips, great for training, but hey, this is going to be great for inference. Okay, great. Well, the problem is if you got this big chip, big wafer, and you think about what happens when you move electrons across copper wires, right, or aluminum wires, heat. So what was happening is the chips were warping and sometimes cracking. And so the Grok guys were like, we won. And so, they have this other chip. It's still a chip instead of a wafer, but it's run on a bigger die, right? Than, all the little chips that go in your phone are run on 2 millimeters and 3 nanometers, 4 nanometers, 3 nanometers, going down to 2 nanometers. And they're up here at 12 and like, okay, we dominate. We're great. So Cerebras, Grok, out of the blue, gets bought by NVIDIA. Because I think NVIDIA said, ooh, yes, we like that. So they acqui-hired the team. Great for us, great for it. So Cerebras says, well, geez, they got bought for $20 billion. So maybe we're worth $20 billion or $25 billion. Because, we actually have this big chip. And so they're like, all right, let's listen. And my guess is they paid somebody, right? Made a political contribution so that now suddenly this issue with G42, nowhere to be found.
I'm glad you mentioned that, Mark, because this is a good thing about timing. Had they come out when they intended in 24, things would have been wildly different, but they waited and it looked like it could be, if this holds, the right call.
And so here's the thing. So I'm guessing that G42 did not divest. I will bet money on that, right? So suddenly someone just decided that it's no longer an issue. Okay. Maybe UAE, who knows what happened.
Administration change also helps.
Well, yeah, actually, it's fun. I was at a cocktail party yesterday for my wife's book group. This is actually a cool thing. This book group's been going on for over 100 years. It's pretty amazing.
Love that.
This thing in Durham. And we're at the Washington Duke Inn, and suddenly there's like this lockdown. And we're like, what the heck? And I can't leave, can't go to the bathroom. And it was because I don't know if it's the king or the crown prince, but one of them from UAE was in the building. And, we saw his picture, right? Their picture on every building we went into, that scowling look. So I couldn't go see him because they wouldn't let me out of the room, but he was in the building at Duke. So, maybe he was getting some healthcare or something, but so maybe UAE came over and did something. So now G42 is not a problem. So they say, all right, we're going to go public at 25 billion and we're going to go at $150. And then, chips are hot, right? And everything's going to the moon. So everybody says, well, I got to buy this. And, the underwriters are like, sure, you can buy it. So we'll just raise the price. So then it goes public. And again, IPOs work like this. So there are these IPO shares. Remember, it's a small percentage of the total float of the business. And it's allocated to your best clients. And that's judged by how much you trade or whatever. And so the average person does not get IPO shares, right? Only super rich people, best clients of the underwriters get these IPO shares. So there's a thing called the IPO pop. Well, then you couldn't buy it at 185 if you're a retail investor, right? If you're on Robinhood or Schwab, can't buy it at 185. First trade, 300 and something. Okay, if now you can buy it because you want it, well, who's selling to you? The person who was allocated it for free at 185. Not for free, they had to pay the 185. So they're flipping. So those people sold. Now what's happening? Price is going down. Well, why is price going down? Well, because it got to. This is a company that, I don't have the exact numbers in front of me, but probably has revenues measured in the tens, maybe hundreds of millions. I didn't look that closely. I'm basing that off the fact that, company We Have Grok was in the hundreds of millions. And I'm getting
around 500 million reported 2025.
Okay, 500 million. So 500 million. 500 million. That's a real number. But 83 billion of market cap means 160 times revenues.
Yeah.
Now, the last IPO that came out like this, that hit triple digit multiple of revenues, Snowflake, got to 200, and then it went down a lot. So again, I'm not short this, although I might, but I'm not short it. But yeah, I think this is a mania. I've seen one mania like this in my lifetime in, early February, March of 2000. I know everyone says it's not the same. It's not the same. It's exactly the same. And there are no charts in history, right? Look at SK Hynix, look at, Micron, there are no charts in history that go up like the left side of the Eiffel Tower and then go flat or keep going up. There are none, right? They all go like this. And you can say, no, I'll find you one. Knock yourself out. Go find one. And it's not that there aren't ones that go like this for a long time and maybe even have a little bit of, but if you go vertical, in fact, some of them, if you draw the parabola, they actually go back in time. The parabola actually goes backwards. So anyone that goes like that will go like this. And this time is not different. Even though Mark Andreessen, he's like, again, the other Mark, he says, people say this time is different, are the four most dangerous words in investing. No, the four most expensive words in investing are this time is different, are the four most dangerous words in investing. And it's actually pretty clever. He is a clever guy. He's actually a really smart guy. I like him. And respect and admire him, but I think it is not different this time.
For sure. And I think the one thing that we can say is a little different, though, is that Benchmark kind of went against the grain and they did something that was hard by going against
Benchmark's the best. Benchmark, full stop. Maybe, this is an arguable point, but might be the best venture fund in the history of venture funds. From their first fund, which was the eBay fund, to, and they're good guys. The thing I hate they're tall, they're handsome, they're smart, they're rich, and they're nice. I'm like, leave them for the rest of us. It's not okay to be so perfect, but they are. And Bill Gurley is just, and he actually wrote a great book that every young adult should read right now, because it's about, running down a dream, thinking about your career for the long term, particularly in the age of AI. So it's a really good book, but they are great guys, and they are very, very smart investors, and, bravo.
To your point, Mark, about being the nice guy, the question that maybe some people are left hanging with is, whatever happened to the assistant, right? The assistant that forced that meeting on the calendar? Well, actually, the partner, Eric Vishria, was asked about this. And so he laughed and he said, I think she'll do well, quote, very well. So to your point about nice guys, she will do okay. And, to that point, and they do take care of everybody at the firm. I will never forget. So I was at the Benchmark offices this back, a long time ago. And the three assistants were talking. And I'm sitting here and I'm not like eavesdropping. I mean, they're talking loud, and they're talking about how much of the carry they're going to get. And they had like 0.1 or 0.05. I mean, it wasn't like a big percentage, but the guys had given them all carry. And this was, in 2000 or 2001, whatever. And it was, now they're just talking about it out loud, millions, plural, of dollars. And I thought it was great. I thought it was amazing. And I was like, and this one probably will do even better than that. And she deserves every penny. I would hope it deserves every penny. And that's probably a good way to cut it and end there. We record actually 2 this week, so we'll be posting this one alongside another great episode that folks can check out with Kieran Lubin, who is the CEO of Block Apps. Some big announcements that were made on our show, and we just want to thank our listeners always tuning in and the engagement they give us. It's awesome. So we'll remind our listeners, as we do every week, to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.